Could see a major tax hike under President Obama's 2013 budget proposal. Individuals who now pay 15% tax rate on dividend income would be slapped with a tax as high as 40%. Let's bring in senior economics reporter Steve Leisman to break it all down. Steve?
Yeah, Scott, we were just joking. I called dividend stocks the flavor of the month, and you said, hey, maybe it's the flavor of the year. No doubt everybody's...
Well, they were last year, right?
They were last year, and still, if you watch the news flow, as I know you do, Scott, every day seems like brings another increase in dividends. So how much can it last, and what effect would taxes have on it? And is President Bush proposing this because of ideology or
President Obama?
President Obama, excuse me. I'm talking about the Bush tax cut. Yeah. Let's go back into the history here and take a look. This is the history of year-over-year changes in S&P 500 dividends. Looks like a random chart. Well, let's overlay recessions on it, and we'll see what the pattern is. Pretty simply, just start over here, 75. The wake of a recession, boom, strong percentage increase in dividends. Come again here, past 2000. Two things happening here. One, you had a recession. You also had the Bush tax cuts. That's what I was going to talk about. You also had Microsoft, by the way, paying a special dividend. Now we come to the present here, and this is the year-over-year change, over 20%. But zoom in here on the decline here, suggests maybe more room to run, especially if you think about what the dividend payout ratio is, which is about half of where it is normally. Let's take another look at is dividends versus wages as a percent of total income. And you can see here, both have gone up gently, but ultimately you can see we're not back to where we were on dividends. If you come over here, we're still below where we were before the crisis. Let's take a look at the number of dollars we're talking about here from the bottom here. Up $475 billion total on wages. That's off a base of $6.2 trillion, but $264 on dividends. That's a big pot of money. If you have a big deficit, one of the things you might want to do is look to where the money is. Dividends is a place where the money is. Doesn't make it right, but if the deficit's your concern, that's where you'd go. I want to show you this interesting chart here real quickly. What are the sources of people's income? 51% coming from wages and salaries. That's down 2.4. Government transfers, that's up 4%. A lot of that's unemployment insurance. Interest income, you guys know this story, down 3.3% because of lower interest rates, and dividends up 2%. What are the issues here? Could either party be forced to hike dividend taxes? Because, again, that's where they need the money. That's where the money is. Secondly, only half of dividends pay taxes, so you're not really making everybody angry. Untaxed dividends are more an issue for the wealthy than they are the broader population. And a couple other things. Could dividends surge ahead of a tax change? We've seen that in the past. Finally, dividend payouts remain historically low, so there's room to run. Bottom line is it looks like there is room to run here. You got to watch the taxes. Right now, I don't think it's going to pass. I don't think anybody thinks the dividend tax hike is going to pass. But down the road, as revenues become a bigger issue, look out.
Yeah, it would be an open question there. Steve, thanks so much.
My pleasure.
Weiss, just tie that up. Dividend stock.
I think it's very negative for the market if that happens, because essentially you've said to seniors, okay, you're not getting anything in bonds, no return there. Now we're going to cut the dividends. So I'd be pretty negative on the market if that happens. I don't think it'll happen.
Right,
I love dividend stocks.
Let's just go on the assumption that it's not going to happen.
Verizon, 5.5% yield. The MLPs, I own ETP. It's got almost an 8% yield. NS, 8% yield. You still got to be there because of where treasuries are. Dividend stocks will continue to move higher this year.
There we go.